Welcome to the Fintelligent Investor channel. I am CA Pratiksha Pai, and today in this video we are going to discuss why regulatory bodies like SEBI and AMFI are having a cautionary approach towards the mid-cap and small-cap funds, and what are the steps that these regulatory bodies are taking to safeguard the interests of the retail investors in the mid-cap and small-cap funds. A bit of context in the mid-cap and the small-cap funds area. In the last 1 year, the Nifty Small Cap 250 Index has given a return of 63.75% and the Nifty Mid Cap 150 Index has given a return of 53.19%. So everything is looking hunky-dory in the mid-cap and the small-cap space. The investors are happy, the companies are happy, and the mutual fund houses are happy. And also looking at these big returns, the investors are pumping more and more money into the mid cap and the small caps. But it should also be known that mid cap and small cap is one of those areas where it is called as high risk, high return. So the returns can go high, but the risks are also equally high. And now the SEBI and the AMFI are just seeing this, that the returns are going higher and higher and the investors are also pumping money, and what this is leading to is an inflated valuation. Let me give you a small example. Say I have 20 coconuts, okay, and I want to sell these coconuts, and I set the price at say 50 rupees for the ease of calculation. Now if 100 people come to buy those coconuts, the buying pressure is there. So what will I do? I will increase the price of the coconuts from 50 to say 75 or something like that. So when there are more buyers, the price also goes up. So what is happening basically is that more and more investors are pumping money, due to which the price is going up. What happens when the price goes up in the stock market? The market capitalization also goes up. And is this the real market capitalization? Is this the real valuation? The valuation also goes up. It is not on the basis of the fundamentals and technicals, but just because there is a buying pressure. While all this is good, but the coming few weeks, or I can say the coming few months, are going to see a lot of volatility. Why? First of all, two big ongoing wars around the globe. One Russia-Ukraine and one is Israel and Palestine. And also elections in majority of the big economies like USA, India, then inflations and interest rate movements. All this can trigger a huge volatility in the market. And as far as the mid cap and the small caps are concerned, if there is a sell-off in the broader markets, then that could amount to huge sell-offs and redemptions in the mid-cap and small-cap space. Again, as I told before itself, mid-cap and small-cap space is such wherein there is high returns, but there is also high risks. So keeping all this in mind, the SEBI and the AMFI is taking a very cautionary approach towards the mid-cap and the small caps, and they want to safeguard the interest of the retail investors in this space. So what are these steps? Let's see. First of all, the trustees of asset management companies have been asked to put a policy in place which can safeguard the interests of all the retail investors in the mid-cap and the small-cap schemes. Now, they have been told to put together a policy by consulting also the unit holder protection committees of the AMCs. Also, how much time is given? As I told you, the period of volatility is going to start as soon as the election season starts. So they've been given only 21 days from March 1st or Feb 29th to be putting all these policies in place. Also, in the policy that they'll be putting forth, what should be present? There should be proactive and protective measures to safeguard the interest of investors, like moderating inflows and portfolio rebalancing, etc. When you want to safeguard investors from just pumping money into certain schemes, what would be the obvious first thing that you would do? Moderate the inflows into these schemes. The SEBI has asked the asset management companies to moderate the inflows into the mid-cap and the small-cap schemes. In the recent days, the mid caps and the small caps have seen huge fund inflows, huge infusions, and the fund managers were also finding it difficult on where to deploy these funds, because even the individual companies' valuations was going high. So the SEBI told the AMCs that come up with certain moderations, like putting a cap on how much of a SIP you can do towards these schemes, or putting a cap on lump sums, or restricting completely fresh investments into certain schemes. Also, schemes, AMCs like Tata, Nippon, Kotak, etc. have already put some restrictions on investments in certain small cap schemes, and many other AMCs might also be following this in the coming days. Next, when you want to create investor awareness about the flip side of these schemes, what could be the thing that you can do? Of course, disclose the risks. So AMFI has asked the AMCs to disclose the risks related to the mid caps and the small caps on their websites. Now, there could be a various types of risks. It's not just that the prices will fall. There could be risks such as how long it will take for a scheme to fulfill redemption requests. Like, for example, say you have 10 lakhs in a small cap and just tomorrow you go, not 10 lakhs, some bigger amount. If you have a huge amount and you suddenly give the redemption request for an entire amount, would the scheme be, able to process that redemption request very soon? Does the scheme have that much of a cash level balance? Because see, even the when you put a redemption request, they should be able to process it with the balance of what they have of cash. Okay, and then next, what would be the impact of large outflows on the scheme? So as I said, if there is a lot of redemption requests, then what happens? There is a selling pressure. In buying pressure, we saw that the prices go up. Similarly, in the selling pressure, the prices will go down. And what will happen then? That is also one risk. Also, again, even if they are able to process the redemption requests, not very soon, but even if it takes time, how will they be able to process it? By giving out the cash balance that the scheme has, or will a large amount of redemption request lead the scheme to selling off the units and of these companies, of these investments? So how will the scheme be able to process all this? These are various risks that are associated with any mutual funds when a large redemption request comes. But of course, the mid cap and small cap are high returns, high risks. So the risks are comparatively more. See, there is no proper SEBI regulations as to how much cash balance an AMC has to maintain towards any scheme. But generally, they'll maintain up to 5% of cash. Now, if there is a huge sell-off, they might not be able to honor your request and they might have to end up selling shares. And when they end up selling shares, it might also impact the NAV of the fund. So all this has to be borne in mind. Also, the liquidity in small caps is very low as compared to the large caps. So that will also be an issue with the small cap and mid cap schemes. And this issue is not so prominent in the large cap schemes. The next step taken by SEBI and AMFI towards safeguarding the investor interest is portfolio rebalancing. See, a mid cap fund or a small cap fund, what does this mean? A mid cap scheme or a small cap scheme also? It means that such a scheme should invest 65% of its total assets in mid cap and small cap respectively, and the rest 35% they have a freedom where they can invest it. The rest 35% they can invest either in large cap, mid cap, small cap, liquid assets, cash, whatever. 65% should be in mid cap and small cap. There they don't have the freedom. In the rest 35, they have a freedom. They can put it in any of these 5 categories that I told. So now what the SEBI told is that you do a portfolio rebalancing and invest a higher amount in large caps and liquid assets and cash. So why? Because as I told just now, large caps have a better liquidity as compared to small caps and mid caps. Also, if a market falls, the large cap stocks will not fall as much as the mid cap and small cap stocks. Okay, because let me give you a small example. Say there is a very fit person and there is an unhealthy person. Both meet with the same type of accident. The pressure or the injuries on the unfit person will be more, whereas the injuries on a fitter person could be very limited. Also, the fitter person will bounce back earlier, whereas the unfit person may take a little longer time to bounce back. So the large cap stocks, generally when a market falls, they don't fall as much as the mid cap and the small cap stocks. Also, not only that, they also rebound faster. So what did the SEBI say? You do a portfolio rebalancing, allocate more to large cap, liquid assets and cash, so that if there is a sell-off in the mid cap and small cap area, you will have the appropriate kind of cash balance or liquid asset balance to honor any redemption requests if there are a lot of redemption requests from the mid cap and the small cap area. Also, even if you don't have the cash balance, rather than selling the mid cap and small cap stocks first, you can go towards selling the larger cap stocks first, and that will not affect your NAV in a highly negative manner. So a portfolio rebalancing can also be looked at. So these are the steps proposed by the SEBI and AMFI. The first one is putting a policy framework in place within the next 21 days, wherein the AMCs can also put in their proposals on how they can safeguard the investor interest. The second is moderating inflows into these mid-cap and small-cap schemes, which means the schemes from their side, the fund houses from their side, have to take up steps to limit the inflows, may it be through SIP or lump sum. They have to try to limit and restrict the inflows as of now into these mid-cap and small-cap schemes. And then third, of course, which we discussed right now, is appropriate disclosure of risk parameters. What will happen if a market falls? What will happen if a broader market sees a lot of sell-off? What will happen if you give huge redemption requests in the mid-cap and the small-cap arena? What will happen if the AMC may not be having appropriate cash balance? Will that lead to a sell-off which could drive down the prices? Then, of course, the next step is portfolio rebalancing, wherein the schemes are also being told to put a better percentage into large caps and liquid assets and cash assets, so that even if there is any larger sell-off, the schemes can appropriately handle such scenarios. Of course, you may be feeling that right now everything is going fine. Why is the SEBI and the MFI trying to just peek in into this? They are the regulatory bodies, the SEBI and the AMFI, and their bottom line motto is to just safeguard the investor interest. And today, of course, as we saw, the small caps is giving a return of 63.75%, and the mid cap is also giving in the range of 54%. So, but however, these can see a downturn, and that is where the SEBI and the AMFI want to safeguard the interests of retail investors like you and me. And that is why they've come up with all these steps to safeguard us as much as possible, as far as possible. What is your comments on this? Do you think these will help? And do you think this will be effective? Let me know in the comments. If you felt this video was helpful, like this video, subscribe to my channel and share this video with your friends. Thank you. I'll meet you next time with another video.